Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday, the 9th of July, 2025. And the time right now, 5:55 p.m. Central Time. Hope you're having a good summer. We are. The trading has been excellent, to put it mildly. And I'm excited. You know, it's been a fun time to be in the markets. Obviously, the stock market on a tear to the upside, and it's again the big boys leading the market up. Nvidia hit an all-time high value, $4 trillion company today, and with that, you know, you just start carrying these markets higher. So the NASDAQ moving again back over to 23,000 level. It was there about 4 days ago, fell back, coming back up. Even the Dow has come to life again. We'll see what these markets want to do. In the metal markets, what we're not getting in the metal markets is the fear yet of inflation. So that's what it's going to take. You're not getting a stock market break to scare people and they go, oh, I got to put on, you know, a trade, a risk off trade. Right now, the risk-on trade is going on in stocks and other markets, and you're seeing that all over. You're holding energy prices pretty good. There's an OPEC-plus meeting in Vienna, Austria, that ends tomorrow. Tomorrow, they'll give us their world outlooks and what the oil's going to do and what they think it's all going at. It's a balancing act right now. They want to produce more oil, take back market share, but they don't want the U.S. shale producers to pick up and produce more. They want them to stay and reduce their production, which we've been, in terms of wells, absolutely doing. Then they expect to see the production numbers fall where they step in. If the price gets up, and let's assume you get to $70 in our crude products, big problem then. That sort of attracts these people. So we will see. A lot of people thought that Brent would go back to the 50, 60 level with additional oil hitting the market. It's a surprise that it hasn't. But according to the UAE, there's a thirst. I'm using their quote, a thirst for the oil that's being put on the market by Japan and China, according to them. All right. Dollar just holding here at the 97 level, staying well under the 100 zone. And the euro, could it get back to the 18-day average is the big question that we want to have answered. Then we get over to the notes and the bonds. So before I get too far here, why don't we take a look together at what you have tomorrow? You got jobless claims coming, and that's 7:30 in the morning. We're going to get the St. Louis Fed president speaking at 9. We get the EIA natural gas storage report at 9:30. We got today more tariffs. I think there were another 5 or 6 countries that were done. It's all in my newsletter already in there. And Brazil's about to get a 50% tariff. Welcome to reality, Brazil. You want to lead up a BRICS movement against the president? You'll get it. How much business do we do with you? Well, it's going to be none at these prices, so that's about where you're headed. FOMC members. All right, so we saw today, and that's why I wanted to stop at the bonds and notes, what they were doing and what they were thinking. 2 of the members wanted a July cut. We had another 1 or 2 foresee no cuts at all this year, with the vast majority of the remaining members saying they can see a cut, but the market's fairly well balanced here. The question is, do we get tariff? Do we get labor weakening, or do we sort of sit where we're at? And they're the ones that are watching the market. Even one member said he thinks we're very close to the nominal rate, which is a rate where you don't cause inflation and you're not too restrictive. You're not causing growth. You're not causing retraction. So very interesting what they said. And the market reacted in a very positive way to it. Once it came out, you really weren't looking back very much on this. So important. All right. Let's take a look at where we're at, though. Let's go to some charts. On the S&P, you're down 0.25% for the week so far. You wouldn't think so. You would think it's at an all-time high in the futures, but it's not. It's down 0.25% roughly. When you take a look at the chart action, you've certainly had a climb right into the highs. The pattern is still one where the swing line, and that's this line I put over each of the charts. I teach it in my full charting course. What you're looking to see, and you'll hear analysts talk about it, is the market making higher highs, higher lows, or the exact opposite, lower highs, lower lows, or you're out of whack where you get, for example, a lower low and then a higher high through here. What do you have going on? Once it sets in and you get a trend, then you start filtering what's the trend doing. One of the things I use are moving averages. Now, I use more than these. In my morning subscriber video, there's 5 that I use. Here I show 3 because it's too much and I don't want to give away what my paying subscribers are paying me to help them trade from and learn from. So I show you these 3. Right now, as long as the market's over the 18-day average, which I term the line in the sand, that gives you a bullish bias. So the filter on the swing line is you have the swing line up, so the trend is up. You have the bias up. Where's the resistance? Because none of these moving averages are resistance. What's above the market? It's Bollinger Band. Where could the next resistance point be? Well, it ran the Bollinger Band here when we had what we call a gorilla glue trade. It's when every day you're hitting the band one way or the other and not staying over it for any real length of time. Then the market goes sideways, and from that sideways, it tries to pick up energy and move again. The energy comes if you have the slow stochastic market locking in a bull trend, and away you go with that. And that's what you look for in these. My formula, admittedly, on my charts here is different than your slow stochastic formula. My paid subscribers, all they need to do is write me, and I will send them the formula. It's that simple. I'm not going into their different computers to change it. It is not where you go in and you say, oh, I've got 3 and 5 and an 80 and a 20. No, 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 no. You got to go into the formula to make the change. And once it locks in, I'm just saying you're buying the breaks in the market until it runs out of the momentum. And that can go on a long time. When you had the momentum break right here, you see what happened? You fell back to the line in the sand, you restructured, and you took off again with that. So a lot of this are momentum trades in these markets. When we get to the NASDAQ, higher lows, higher highs. Did I pass one chart? No, I did it right. All right, so here you are, new highs in the move coming. This is right where you're at. Could we be going up towards that 23,400 level? You absolutely could be. When you look at the Dow, the market's one of the weaker of the indices. It kept its bullish embedded reading, but it's the one that you got to keep your eye on. I don't trust it. It's not acting as good as what's coming out of the NASDAQ. So this isn't the one in favor. So how's the last one, which is the Russell? And in the Russell, you have the bullish embedded reading. It's acting better than the Dow. And it's keeping the momentum higher. It came down and challenged the 200-day average 2 days ago, and it's taking off for the move. What's going on here? Traders in mass seem to be saying, you know, I want those low companies. I want those companies that haven't gone anywhere, that are very credit dependent, because everything else is gone and it's going to be like a meme stock. And they're buying these up. Now, are they right? It doesn't matter. I'm trading the index and away you go. You either trade the individual stocks or you trade the index. This index is right now in the bull camp. And I changed on that, 2 weeks ago or so, and looks like I did right. I am the happiest guy. I laugh at myself sometimes on this because I was looking and I kept telling you, I said, come on, already hit the upper Bollinger Band. That's where I thought it was going back to. And today it gave me what I was looking for. So it's, again, Europe taking off because people are thinking that the EU is going to do fine with the U.S. They're not going to fight it. They're going to try to get something done. They have until the 31st or beyond. I never believed the president's drop-dead dates of the August 1st, July 31st, because he changes them on you. I mean, he comes out, I'm not going to change, then it's changed. So I never know what to believe. And that's his art of negotiation. You think you understand what the deal is, and suddenly the deal's not the deal, or the date's not the date, or the event's not the event. That is the difficult part for all this. And as much as he's got a cabinet, I don't know who stands up against him in that cabinet. Higher lows, higher highs. You can see how the market's embedded here. Still looking to be good. But remember what I teach. I teach that you don't add new money to a position under a Bollinger Band or below or above it. Above or below. Either way, I don't want you to do that. The bond market's in no man's land. It seems to be caught between the upper Bollinger Band, made a run to the lower one, doesn't seem to be able to hit it. It hit it back in May, but it hasn't been able to come there. It just keeps coming back to the 18-day average. But the difference this time is now the market got under that and it's rallying up to it. So instead of it looking for support, it's finding resistance at that number, and that's a difference on the chart right now. In the 5-year note, you're still in a bearish phase unless you can get up and over the highs of 2 days ago. So pay attention, see if the market can do anything with that. Let's see where we're at right now. That's where you're at in the evening trade. So that's what I'm looking for. Even if you get over that, because you have the lower low, it's not a real trend. You seem to be treading water, in other words, in what's going on. Now, when the dollar bottomed out, and you lifted up the red line here and you started into the oversold, you came back to the 18-day average. That is your resistance point. If the market's going to mount a real meaningful rally, are you going to the upper band? You could. As a chartist, I'm not telling you to be short here because you have the swing line up. It's a nothing. It's a place to be out of shorts, waiting to see what the next event is. And the flip-flops in the euro, when it lost the bullish embedded reading, I still think it should be going back to the 18-day average. And you can see that number's around 117.21 right now. British pound has re-entered bearish territory. Lower highs, lower lows, unless you get back over this high. I think that's around 136.83. It's around the zone of it. Otherwise, you could fall back in the market a bit. They didn't get too much done in their budget. It's a real crime. Mr. Starmer's not getting a lot done. So the prime minister's got problems. Bitcoin, you know what I think. I think this is all going to be a base where the market tries to move out to the upside. I have said it repeatedly, day upon day, and that's still what I think is going on. I admit to confusion that all this oil coming out on the market from OPEC again, and the market rallied on it. I did not expect that when I saw last weekend what OPEC had decided, and yet the market rallied. But that's what charts are about. This has not been in a bear mode for a long time. When the market over here, 5 days ago, 6 days ago, crossed through that, it ended this decline. Now the question is it really bullish or not? It's trying to be. But if you bought it at 69.93, are you really prepared to risk to 67.36? $2,600 on a full-size contract? I don't think so. I hope not. On WTI, it's the opposite. You're coming up. And what's caused a lot of problems is diesel fuel is very much in demand in the United States. And that's kicked up everything. Gasoline has come back since the 4th of July driving holiday. And I told you got to refill the stations and all, and they're going to pay up. Take a look, though, at the diesel, the RBOB, the HOQ. Lower highs, lower lows in the nat gas and embedding. Bearish. Simply put, bearish. The summer hasn't turned into that heat map yet. And if it doesn't, like I had my doors open today. It was beautiful. We had the air on, and then the doors can be open with the fresh air. It's not the heat that we had for a while. If that stays away, you're not burning through this natural gas right now. Heating oil is also used for air conditioning in some areas. I'm Ira. You have yourself a great day. Remember, our free offers are there. All you have to do to take advantage is go to iraepstein.com, free offers. When you do so, there's many. The Spider ETF, give it a try. You see if I help you in the morning with trade ideas. It's that simple. Just sign up for them, and away you go. You'll get a 2-week trial, and you can decide in that time frame. I'm Ira. Have yourself a great evening. Look at the other videos. I'll see you in the morning flash video.